Good evening, ladies and gentlemen. We apologize for the delay. On behalf of Sa Securities Private Limited, we'd like to ladies and gentlemen is a trading member of the Colombo Stock Exchange, one of the leading stockbrokers in Sri Lanka, and have been serving foreign investors and local clients for the last 20 years. It is fully owned by Sampath Bank, the best commercial bank and retail bank in Sri Lanka, as recognized by the prestigious World Finance Banking Awards for the 7th consecutive year. As cracks in the financial system began to appear in the early 2000s, some of us in the business world began vigorously debating on all the issues that's been flowing around. Some of us, like our colleagues, competitors, had been forecasting trouble for a number of years. Survival in Sri Lanka and being at the major business capital market at the heart of the financial capital of the world, it was difficult not to become immersed in the events of the past events. When capital markets collapsed following the outbreak of the global epidemic, and when significant increase of impairment losses began to be shown by the financial institutions, one thing became very clear to many of us is that it's a unique platform that was made history. How are we planning to face this? How are we planning to regain the former glory of the Sri Lankan capital markets? Our topic today, restoring financial strength for capital markets, and we have a very eminent set of panelists joining us today with our fantastic moderator to take on this session. We'd like to thank our media partner, the Daily Financial Times, for joining us in this endeavor. Ladies and gentlemen, please give me a brief moment now to introduce you to our panelists. He is the State Minister of Finance, Capital Market and State Enterprise Reforms. Let me begin by congratulating the Honorable Ajit Nivad Cabral on his new post as State Minister. Prior to his appointment as the State Minister, he was the Senior Advisor to the Prime Minister on Economic Affairs. He was the 12th Governor of the Central Bank of Sri Lanka from July 2006 to January 2015. He also functioned as the alternate Governor of the International Monetary Fund, Chairman of the Southeast Asia Central Bank's Board of Governors, Chairman of the SAARC Central Bank Governors Forum. He is a chartered accountant by profession, having qualified as one of the youngest chartered accountants in Sri Lanka while winning many prizes at the CA examinations. During the period he served as the governor, he transformed the Sri Lankan economy for the GDP of USD 24 billion to USD 79 billion and being a safe, stable and fast-growing middle-income emerging market nation. He was previously the Presidential Advisor on Economic Affairs and Secretary to the Ministry of Plan Implementation and closely associated in the development of the policy framework and development plan of the government. He also served as the President of the Institute of Chartered Accountants of Sri Lanka and the South Asian Federation of Accounts. Ladies and gentlemen, please join me in giving a big round of applause to the State Minister of Finance, Capital Market and State Enterprise, the Honorable Ajit Nivad Cabral, to join us on stage. Joining us next as our panelists, he is a renowned entrepreneur and the chairman of the Sri Lanka Export Development Board. With a degree in applied economics and business from the prestigious Ivy League Cornell University and subsequent to higher studies at the Harvard Business School, he sought after leadership and capitalism with the same determination and drive he put into the foundation of his education. He currently is the Managing Director for Global Rubber Industries Private Limited, a manufacturer of high-performance specialty tires which sells its products in over 50 countries. He is also the Managing Director of Global Seafoods Private Limited, a processor and supplier of high-quality seafood to Europe, US and Japan. His latest entrepreneurial endeavor is Iyengar Holdings, an investment company that has a large and diversified portfolio of investments in the Colombo Stock Exchange. The first investment of Iyengar Holdings is in a luxury real estate project in the Maldives. He is a principal shareholder of the largest listed insurance company in Sri Lanka, Selingco Insurance, and he's also invested in the largest microfinance bank in Sri Lanka, Sa Development Bank, in which he is also the director. He's also a prominent shareholder of Sampath Bank, which has been recognized as a growing force in Sri Lanka's financial services. He is the president of Sri Lanka appointed him as the chairman of the Sri Lanka Export Development Board, and he is also the past chairman of the Sri Lanka Association of Manufacturers and Exporters of Rubber Products, past president of Seafood Exporters Association of Sri Lanka, co-chair of the National Agenda Committee on Export Development, member of the Young Presidents Organization, and member of the Sri Lanka Society of Rubber Industries. Ladies and gentlemen, please put your hands together for this voracious reader and eloquent speaker. A round of applause to our next panelist, the chairman of the Sri Lanka Export Development Board, Mr. Prabhash Subasinghe. And to take on this fantastic forum, joining us as our moderator is the founding editor and CEO of the Daily Financial Times, Sri Lanka's first and only national daily business newspaper since 2009, a senior journalist and an editor with over 25 years of experience. Ladies and gentlemen, please put your hands together for the chief editor at Daily Financial Times, Mr. Nista Kasim, your moderator for today. The session will go on for 1 hour and we will open the forum for questions for 15 minutes. Thank you. Over to you, Nista.
Thank you very much, Sharon. Good evening to everyone. I will avoid sort of obvious introductions, but the idea is to get our state minister to outline the government's vision, and particularly with regard to capital markets as well. I think we are privileged to listen to him because this is the first financial sector investor forum he's attending. So thank you very much, Niwad, for finding time. We'll invite Mr. Cabral to make some opening remarks and we'll ask some questions. The idea is to open it up to the audience. Please so make use of this opportunity to ask any questions. I will moderate in between. So thank you very much. Over to you, Niwad.
Thank you, Nista. Thank you very much, Nista. The announcement said that you were only the founding member for 25 years. I used to think that you have been there for about 100 years. Thank you very much for the invitation, and particularly I'm pleased to be here to speak a few words and also perhaps outline what the new government is having in mind with regard to capital markets, because I think this is the first time that in our history where we have had a special function being entrusted to a minister in relation to capital markets. I think there were many occasions where there was reference to the capital markets, but this time round there is specific mention, particularly because the government is very keen to ensure that all these markets are buoyant, that these markets become robust, that we have, in the true sense of the word, funds within the country as well as coming from outside in order to make business work. I think we have begun to understand how important it is to have capital if we are to progress and grow. We have had different types of capital, but we do have always had a dearth of capital, which has been, I think, fulfilled in some instances with capital from outside. But overall, we have always had a clamor for capital, and we have been speaking of setting the stage for capital to grow within the country, and we have always been lamenting that we somehow or other don't seem to be having enough. I remember way back in 2014, at the time that we left off, we had grown the economy to about a $79 billion economy. And at that time, the capital markets, and we talk about capital markets by saying this is the market for shares. The Colombo Stock Exchange had grown to about $25 billion by that time. But at that time, we believed that $25 billion market capitalization was not sufficient, and that we had planned for at least the market cap to rise to about $100 billion by the end of 2020. That was the overall plan, and we were thinking of developing the economy from $79 billion to $150 billion, and the capital market, at least the stock market, to be at least $100 billion. And that we had also planned out in different stages, some part of it to grow in a certain way, another part through new infusions, another part to come in through the listed bonds. So there was a clear plan that was in place. But that unfortunately didn't go through. And when I come back and we take stock, we find that the economy has grown only up to about $84 billion, which is a marginal increase of about $5 billion over the past 5 years, which seems quite low. And the per capita income has actually reduced last year by about $227. So we do have a platform which is somewhat dismal. But always dismal situations are useful because it sets a fairly low base on which we can build. So we are now looking at a new robust mechanism to take us forward, and the government, particularly our new president, identified the lack of capital as being one of the constraints for development, and he has had the vision to now entrust the capital formation to a separate ministry and to take that forward. So it's a fairly onerous responsibility, if I may say, but at the same time I would say it's a very challenging situation as well. That challenge has been made even more difficult by the fact that we are now confronted with the COVID downturn, which is across the world, and that makes it all the more formidable. But at the same time, we do realize that it opens out new vistas as well. So we have identified so far several areas in which the capital could flow into the country. Not only the capital that you are forming as private sector within Sri Lanka, but capital to come in. The tendency was that we would search for new bonds, and people expected us to do that, which is of course something that we need to do, because we need to have more and more capital being formed by way of fixed income securities. But at the same time, Sri Lanka has always had a huge dearth of people having equity capital. Equity capital has been sparse. We have not had enough. And the fact that we have threatened with this COVID and that held a major downturn meant that we were now faced with a situation where equity capital was almost stagnant, and we had to borrow more in order to keep our businesses going. So when you borrow more, we did identify the situation that the new borrowings would eat into the meager profits of all those who are borrowing, which means you have the old loan to pay, you have to pay the old interest, you have to pay the new loan, and you got to pay the new interest. So it's not a very sound equation that we are looking at. So we decided that we would need new infusions of capital to come into the country, and we identified equity funds which will need to be nursed to bring capital into Sri Lanka. But to do that, we first got to see that our own capital markets become a lot more robust. Nobody goes into another country and start investing unless that country's people are also investing. So we got to ensure that those investors within Sri Lanka are encouraged. We can't frighten them away. We got to encourage them. We got to nurse them. We got to make sure that they have a good playing field in order to invest within the country. At the same time, we got to make it attractive for outsiders to come in as well, not only for the normal formal capital markets, but also the equity markets, and we are also particularly looking at the venture capital market as well. We have had some experiences with venture capital in Sri Lanka. But I think far too many bankers got into venture capital. Once the bankers get into venture capital, they continue to look at the projects with the banking eye only. And I'm sorry to say this, but I have seen this happening on so many occasions. Those industries as well as those ventures die even before they can be really walking up and walking around. So we need to have a fresh look in a fresh manner at these venture capital funds. We need to see that the government doesn't get involved in those, because if the government gets involved, most probably it will not work very efficiently. We got to see that it's a private sector driven, private sector initiative, and we'll support you on that. So on one side, we will have venture capital funds being nurtured as well as supported. We'll have the normal capital markets, which is of course the share market, the bond market, as well as the markets that you have for other instruments like the various derivatives. That's something again to be done by the private sector. Then of course we would have to also develop the bond markets, which is essentially right now in Sri Lanka the government bond market. The government bond market is also extremely important part of the savings, not only savings from Sri Lanka, but we got to attract savings from outside as well. And to do that, we have had some difficulties. If you remember, Nista, in 2014, we had as much as US dollars 3,450 million invested in the Sri Lankan government securities. By the end of 2019, that figure had fallen to less than $500 million. So a huge flight of capital had taken place in our country. So we need to bring it back. Of course, it sounds easy. You had 3,400, now you have 400, so you can easily attract another $3,000 million. Well, if you get the conditions right, I think we can attract it back. We did have, even I remember in 2007 and 2008, there was a large amount of foreign capital that left our country. And at that time, there were many who thought we will panic, but we didn't. We allowed that money to leave because that was the right of the investors who had invested. But because they were able to take their money out without any pain, they came back. They came back and they had a very good relationship with Sri Lanka. We got to get that relationship back. I think if we play the right chords, if we woo them properly, we give them an attractive proposition, there would be enough of foreign investors who would like to come back to Sri Lanka. So we are attempting to bring them back. Very soon an announcement will be made about a special attraction that would be done to woo that capital back, where we take some of the uncertainties of the rupee depreciation away from them so that they can concentrate on the normal yield. So that's important for any investor to understand. If you give them too many risks, they will shy away. You got to at least reduce the risks that they are faced with so that they would be encouraged to come into a market like Sri Lanka. So those are matters that we are thinking of. We got to make sure that we get that part right. We also got to get our debt right. I think a lot of concerns have been raised whether Sri Lanka would be able to continue to repay the debt. I want to, at the outset itself, assure all of you that Sri Lanka will not default. We will make sure that all our obligations are met. We have done that for the last 60 years and we'll continue to do that. Even in the worst of times, when there was a war on, there was a global recession, there were oil prices shooting up to $145 a barrel, we made sure that every single dollar that was due was paid. We made sure that every single rupee that was due was paid on time and without any pain to the lenders whatsoever. So that policy will remain and we want to give that assurance. But at the same time, we got to get our debt management right. A few days ago, there was several people who asked me this question. So I told them debt management is not only about the quantum of debt. Quantum of debt is certainly an important segment, an important part of the debt management. But at the same time, debt management is all about your interest rate. It's all about the tenor. It's about the composition of the currencies in which you hold your debt. So all those are factors that have a huge impact upon the debt that you are carrying. So that will be another part of the equation that we will be looking at carefully. We got to make sure that all those factors are in the right place. That's why in the last 8 months, you would have noticed that we made a lot of efforts to bring the interest rates down so that you make it manageable, not only for businesses, but for the government as well. We hold something like 7 trillion rupees in treasury bills and treasury bonds. And if you take 1% of that, Nista, that's $70 billion, 70 billion rupees, I'm sorry. 7 trillion, 7,000 billion rupees that means. On 7,000 billion, 1% interest reduction will reduce your interest burden by 70 billion rupees. And 70 billion rupees, my dear friends, actually buys you about 2 Colombo-Katunayake expressways. So you can just see what an impact the interest rates have on the debt stock of a country. Second is the tenor. If you can stretch your repayments, which is 5 years to 7 years, then you get a huge advantage. When I took over as the governor of the central bank, the tenor of our debt stock was only 2.3 years. Most of the bonds that were issued were 2-year bonds. It was actually not a good thing to even call it a 2-year bond a 2-year bond. But when we left, we had 30-year bonds. 30-year bonds. Of course, the 30-year bond is what made the bond scam as well, but that's a different story. But if not for that, we probably wouldn't have had that because it was not possible for someone to manipulate a 2-year bond. But I suppose somebody can blame me for that now, saying, why did NIVAD go and have 30-year bonds? That's what made Alexander use that as the platform for the 30-year scam. But leaving that aside, we had confidence within our bond market, which allowed us to issue 30-year bonds. So that was a huge transformation of our bond market. But we need to get that back and get it into proper shape. So tenor was shifted from 2.3 years to as much as 6.5 years by the time we finished our term. And that fortunately has not reduced too much. We are still at about 6 years. But the normal progression should have taken our should have taken our debt stock to at least 8 or 10 years by now. So we don't have that luxury. We have only a 6.5 year tenor stock, which puts a certain amount of pressure on the management of the debt. At the same time, we had about 35% of our debt stock at that time in foreign currency. Even with concessionary loans, we had a good mix, 35 to 38% in foreign currency, balance was in rupees. Today, it's a 50-50. So we got to again claw back and make our debt composition back into a higher percentage of local rupees and a lower percentage in foreign currency. So that's another challenge that we will face. So in the next few years, we have our work cut out. We got to get our markets right. We got to get new investments to come into Sri Lanka. We got to adjust our debt stock. We got to reduce the debt servicing cost. So all these need to be done together. And that's a challenge. So we will look at the export sides to see that we have a great amount of inflows, so that will make our pain much less. But at the same time, we got to get our macro fundamentals right. The moment you get your macro fundamentals right, you will find that people don't need invitations to come and invest. I remember in the latter stages of 2013 and 2014, the responses that we received from the investors was not as to whether they could invest. They used to come and say, in order to invest, we would like to have the thresholds that you have put as limitations or ceilings are lifted. That was the reaction that we received. Because people can see a good investment when they get it. So getting that part right will be another massive responsibility that we have, and we would be working on those factors as well. The third point that I want to make, and I'll stop with that, then we can field questions from you, is to get the economic growth back into action. The best way of managing your debt, in my view, is to grow your economy. If you grow your economy, your denominator becomes larger, So your debt stock anyway becomes a smaller portion of the total as when it's expressed as a percentage of your total GDP. So getting your GDP to grow fast is very, very important. Unfortunately, our GDP grew very, very slowly in the last 5 years. I think all of you felt that. As a result, what happened was the debt stock got larger, but it was disproportionately larger because the debt rose by 100%, but the GDP grew by only about 7 or 8%. So naturally, the debt as a percentage of your GDP became a lot more worse than what it was. So we are now highly vulnerable. When we took office in 2006, our debt to GDP ratio was 92%. After all the development work that was done, we were able to claw back on the debt to GDP ratio and bring it down to just 71%. Unfortunately, we are taking over once again at 93%. So again, it's a challenge, but we are ready to face the challenge with the new instruments that we would have. So to do that, we have set out a plan, which the President has already announced, which is called the Saubhagya Dakpa, that is the visions of splendor to grow the economy towards prosperity. But at the same time, that has had a bit of a dampener, not a bit, quite a serious dampener with the COVID situation. But we shouldn't get ourselves mixed up with the COVID and think that we are going to be doomed. Yes, there has been setbacks, but at the same time, we would need to now work harder and smarter in order to get to where we are trying to get. We have planned for a 6.5% growth, which is quite ambitious. But I remember even in 2005, when we were developing the Mahinda Chintana, we did aim at an 8% growth. This time it's a little more modest, Nista. It's 6.5%. But I think the first year would be tough getting there. But one thing that we would realize is that we do have a low base in 2021. So 2020 has been a difficult year. If we can break even in that year, I think we'll do well as a country. I think all of you as businessmen would also pat yourself on the back if you can break even. Many of you are having challenges. We know that. But at the same time, if you can break even and if you can maintain a certain stability, I think you'll be all happy. Same goes for the country as well. We have been able to put in a few difficult policies, which hopefully we can remove or lift as quickly as possible. But at the same time, those were necessary in order to get ourselves into the right frame in order to have a thrust for the future. So 2021 is going to be a very interesting year. Hopefully we'll see the end of COVID, or at least see the waning of COVID, which will bring back some of the industries that have been constrained to get back into the saddle. So that's the prognosis for 2021, and I'm confident that with the policy that we'll put in place, as well as what we are going to do in the next 4 months, particularly with regard to the capital markets, as well as the reforms that we are not going to have reforms which normally private sector expects from government, but we will reform government in a way that is proactive. If you look at the Gazette notification that you saw, which listed out the new ministries, 28 new ministries as well as 40 state ministries, what was significant was that it was the first time that a government had set out a work plan for its ministers. Now that's I would imagine, an awesome development, which none of you had so far acknowledged from the private sector. But if you had done it in your own organizations, you would have felt proud. I've given a list of duties for my board. I've given a list of duties and the vision as well as the deliverables that I think our different departments should deliver. You would have felt proud that as an organization that you have done that. But we have done that for the government. We have said for each one what their priorities are. We have said what their roles are. We have said what their institutions are. And we have given that as an overall to-do list to all these institutions. We have made people responsible. We can measure them. More than anything else, you can measure us. journalist who came to see me, and he had read my part of the work very closely. And he said, "You are responsible for this, Minister. You are responsible for the other thing." It's good to be that, because then we all have a workload which is cut and dried. We know exactly what we need to do, and that's what we would be having to do. So that's true for everyone. It's true for the ministries, for the other institutions, because that will go down the line to ensure that a certain accountability is established within the country. So this is just one item that I spoke to you about. We will have a few more surprises for you about how governance will take shape within the country. There will be improvements, and those improvements will make it easy for you. We are particularly looking at the doing business indicators. I remember Mr. Basil Rajapaksa and I took great amount of pains to develop that situation. We were at 111th position in 2008, but by 2014 we had come down to the 80th position. Unfortunately, we have gone down, but that doesn't matter. We will claw back. Actually, we are looking at being at least the 25th rank by year 2025. So that's an awesome challenge. We know all the other countries also would want to improve. So in that improving scenario, we'll also improve. And we'll make sure that government stays focused in improving. So the beneficiaries will be yourselves, because you can do business better. You'll be able to make sure that you are able to deliver better, and you will have less time to spend on mundane stuff which the government should be doing and providing you, rather than, and then you have time to go and look at your own businesses to develop the businesses. So I can assure you that there will be a good platform that would be made for you, but we want you to make use of that. Make use of that and uplift your game as well. So we'll help you to do that, and you will in turn, I'm sure, help the country to grow, and that would mean actually what we have aimed to do, which is prosperity for all. Thank you, Minister.
Thank you. Thanks, Niwar. Excellent introduction. Also, I'd like to move on to Prabhash. I think exports key to improve the reserves. What's the outlook? We have had some good months. Is it just a surprise, and then will end up being more challenging going forward, and particularly the outlook for 2021?
So I think at the beginning, very beginning in April, when Sri Lanka closed down almost end of March, and also with different markets where we mainly cater to, we talk about the US and Europe, we saw a resurgence of virus and was quite strong. We were very concerned about what was going to happen with the export sector. We crashed almost from $1 billion to something like $270 million in April. Of course, we've seen a very strong resurgence in our exports since April to now. We passed $1 billion in July. August numbers are just out. It's just a near $1 billion, which is even higher than last year. So I would say the consistency and the sustainability of exports sector is going to do well this year. For sure, if you look at the entire year of 2020, it would be less than last year. But I don't think we would have honestly expected such a strong recovery in 2020 with what's happening in the world. We also got to keep in mind that we are seriously only catering to two markets in the world, and that's the European Union and the US. And everybody knows what's happening with COVID in the US. It's pretty much a disaster. European Union is doing better, but we will see the virus resurging on and off with winter coming in, etc. So I think we need to manage expectations. But when I look at all the different sectors, I think our exporters have been very resilient. So if I look at 2020, if I look at then going forward to 2021, I think this is one area where without serious intervention up to now, businesses have done well. Government is now seriously interested in the export sector because they see revenue coming into the country, and we being able to defend how Sri Lanka can stand because of how strong the export sector is doing. So with additional intervention going forward, and I think the November budget would be a good example of some of the things that we're thinking about of how we want to support the sector. I think 2021 would be definitely a better year than this year.
Okay, thank you. Niwad, I think Prabhash mentioned about budget. Should people wait till November to see or assess what is in the offing? Or, I mean, there is a tendency to wait. I know you said 4 months, and because there had been so much of changes in the last few months, people are looking for more clarity. Will they get it in November, or they should basically start from now on?
I would say things are getting back to normalcy. Of course, it's a new normal, as we are now used to saying. It's a new normal, but it is beginning to take a shape of some clarity and stability. You have an exchange rate which is reasonably stable. You have an interest rate which is reasonably stable. You have got exports that are now bouncing back. We have got a few challenges, for example, in tourism, which is tough, but you need to look at that. But people now need to innovate and see for themselves how they would go forward. I would think using the new equilibrium, people should try and make the best use of that. I'm particularly happy that I have seen so many people coming back to the market, investing. In the last 15 days, I saw in your newspaper, Nista, you have mentioned about 15 days where the turnover has been more than $1 billion. So, which is a useful indicator that it's not just a flash in the pan. It is, to some extent, sustaining itself. So, there is a regular interest within the market. So, if you continue with that, and then that happens and that occurs, I'm sure that we would see new normal being established and people beginning to have faith and confidence. Economics is all about confidence. People have to feel good when they are investing. People have to feel good and feel better and have hope for the future. So that's what we got to make sure that we provide. By doing what we are hoping to do, I'm sure you will also feel that there is some action being taken by the government, because people actually wait for some clue or some signal from the government. We have been giving that. We have made sure that the rupee, even though in the worst of times in the last few months, we have kept it to some extent stable, and now it's beginning to show some semblance. Of course, it has had its difficulties as well. But at the same time, people can now look at a situation where they can have confidence. So we would like to maintain that situation and to give you confidence so that you can in turn have the confidence and infect others with the confidence, not with the COVID. So if you do that, I'm sure things will definitely turn better.
Do you think the exchange rate is very realistic? Because it has started appreciating this week. It was depreciating last week, particularly in the absence of inflows, and the outlook for inflows improving is also so weak. You think is there intervention? And also the other question of interest rates. I think bankers are waiting till the interest rates go back to some level of not at this low level, particularly with regard to savings.
I have a little freedom now to speak about the exchange rate, which I didn't have for almost 9 years. So I'm going to enjoy that. Well, at that time, you did realize that there were lots of conditions that we put in place that made it possible for the exchange rate to remain at those constant levels without it being, without any intervention as well. But at times when there are lots of fluctuations, it's necessary for a regulator or the central bank to intervene in order to provide that stability. As you know, one of the main functions of the central bank is to provide stability. And I think in instances where you do have some undue fluctuation, the central bank might use its instruments in order to do that. So I believe the exchange rate depreciated within the last 5 years, mainly because there was a fairly large flight of capital from Sri Lanka. That was the reason. Particularly from the Sri Lankan bills and bonds, there was a large flight of capital which took place for different reasons. I won't go into those reasons, but it occurred. As a result, the rupee underwent a fairly turbulent course, and the depreciation that we encountered during that period, in my view, was more than what we should have ever had. So that will suggest you a clue that the rupee is today depreciated more than what it should be. So which means that if you take the right steps and we attract the right capital, we would probably see an appreciation of the currency. Now, an appreciation of the currency can be beneficial to a lot of people in the current context, but at the same time, there will be a few instances of it being detrimental as well for the others. But that's always the tough part of getting the rupee right. So there is no real exchange rate that we can say is the perfect one, but you got to be fair to all the stakeholders. I always used to say this: importers want to have it low, exporters want to have it high, those who are getting remittances into the country want it high, those who are remitting out want it low. So each one has its own preference for where the exchange rate should be. But right now, there won't be any debate that it is more depreciated than it should be. So in the next few months, you may see some policies which will pull back the overall exchange rate. If that happens, we'll probably see Sri Lanka having a better set of macro fundamentals than what we have. The second part that you mentioned was about the interest rate. Interest rates are actually the basis on which businesses can grow or not grow. Last few years, we had businesses stagnating, mainly because the interest burden was far too high. Take even the government. The government paid about 400 billion as its interest bill in 2014. It paid 500 in 2015. It paid 600 in 2016. It paid 700 in 2017. It paid 800 in 2018, and it paid 900 in 2019. No business can survive if you have that kind of an interest burden so quickly impacting your bottom line. It happened to the government, and each year the government had a formidable bill to pay as far as interest was concerned, mainly because the interest rates rose so much. So we had to pull that back. So that's what has happened in the last few months, and we would like to see that sustaining itself. Of course, it has the other side, as Nista says, and Nista is now 25 years older, so he naturally wants to see higher interest rates, so which is natural. I myself would like to see higher interest rates because I'm also that much older. So, but at the same time, we got to get that balance right, because we got to have savings being rewarded, but at the same time, we got to see that the interest rates are competitive enough for people to be able to do businesses. And globally, interest rates are low. You know that. You know some countries have negative interest rates. People have had negative rates in certain countries for a long period of time. So when you are competing with countries which have such interest rates, and when you have to deal with them as your partners, then naturally you have an additional challenge as well. So that's the overall mix that we have to work on. But I believe that what we have today can change slightly, but not too much. But the people who are affected deeply are the senior citizens, so we may have to work out some kind of a mechanism that would provide them with some additional support, which will need to be done in a way without disturbing the rest of the interest rate trends, because the current interest rate trends are good for business, and we got to ensure, we got to understand that the bottom line would be have good rates which would encourage people to do business, and we don't want to tamper with that unnecessarily, which would mean that businesses can have another challenging period if we tamper with it once again.
Before I open up to the audience, I just have one more question. This is again the import restrictions. You're looking for a revival of the economy going forward. How long will the restrictions continue? And also this more clarity on the import substitution or domestic industries. Is it just because we are reacting for the COVID, or is it a conscious policy going forward and there won't be any reversals like in 2 years from now?
Very interesting question. Thank you for that, Nista. You see, the factor that prompted us to go into this new policy was certainly the COVID. But at the same time, you would notice that there was always a need for Sri Lanka to be able to do what they can do in this country without having to rely on outsiders. Take milk foods. We pay something like about $350 million to import milk. But if we can manufacture it here, that $350 million would actually go to our own livestock development farmers, which is going to be a fantastic income for them. So now that income actually goes to the New Zealand farmers or the Australian farmers or farmers from somewhere else. I'm not having anything against them, but if our farmers can be the beneficiaries of that income, certainly something which is very good. Take even some of the services. If those services can be provided in Sri Lanka, then it should be encouraged. So we, I think, were prompted to do that by the COVID, but certainly it is a kind of a policy that warrants a lot of attention more than what we have originally given. But today talking to different entrepreneurs where we want to encourage this Made in Sri Lanka brand. We're thinking of having one-stop shops, not for the foreigners, but for the locals. So at least one in every province where we can have a one-stop shop, where people can come and get their tax matters resolved, their matters with the Pradesh Sabha done, with regard to their local government issues. All that can be then dealt with in one place. So that would mean that the local businesses are also supported very much like what the foreign businesses are supported. If you do that, we'll probably find that our local businesses are also supported in a robust manner to go ahead with their businesses. So I would think the answer is somewhat mixed. Yes, we were pushed into doing that. Even some imports restrictions that we had to do was because naturally when you have one of your major inflows cut off, or a large part of your inflows cut off, Prabhash just mentioned from $1,000 million, when you have $270 million, something has to give somewhere. So you need to stop somewhere. Otherwise you will have to default on something else which is even more important. So that decision was taken, and we were quick enough to take that decision, which we know sometimes can cause pain. We know that it has an impact on growth, but we need to again change that back as quickly as possible. But we use that opportunity to do certain things which we couldn't do in the past. So we are now pushing people to do other activities that they didn't do in the past, so that will be a good approach for them. And I believe that in the next few months we would see a lot more Sri Lankan entrepreneurs coming and doing various projects which they would have otherwise not undertaken. But that would also mean that we had to have a lot more capital coming in, because you know, if somebody is to do a new business, they'll probably come and say, I need 100 million rupees for that, or another 200 million rupees for that. So we got to create the space for that capital also to originate from within, and if it is not here, we got to have it coming from outside as well. So those will be the challenges, but the objective is clear. We want to have as much done locally so that our local population will enjoy the incomes, but in so doing we got to couple it with another investment, which will be one of the new challenges that we would be facing when we start doing that as well. So we are alive to that, but certainly it's something that we'll need to do.
Thanks, Nivad. Anyone in the audience who want to make use of this opportunity? Do we have roving mics? Yeah. I can. You can speak up. No, till the. Can you stand up, please? Yeah, that's okay.
Sorry, I didn't hear.
Fiscal discipline. Yes. So if you are to bring back the investors, fiscal discipline will be something that they will be following. So can you just explain what you have in mind in terms of, I feel that there was a sort of a deterioration of fiscal discipline during the last, so far this year. So yeah, your thoughts on that?
Good question. Thank you for that. See, we got to have discipline more than anything else, fiscal as well. Now, fiscal discipline sometimes people believe is based upon how much money you print or what you do with the money, which is very, very important factors. But at the same time, fiscal discipline is also spending money on the right things only, without spending it on unnecessary things. Now, if you really look at the increase in our interest rates and the increase in the interest that we paid over the last 5 years, which is something like about 500 billion rupees, it's an awesome amount, formidable amount. So, if you can cut on those areas, where that is actually the real waste. Sometimes we do see waste, and we see some Pradeshi Sabha not knocking off the lights, and we say, yes, that is waste. Perfectly right. But to my mind, if your interest rate goes up by 1%, that is far more waste than anything else. So fiscal discipline comes from areas such as that as well. Fiscal discipline comes from getting the big tickets right. That is where the real discipline needs to come in to an organization. The same way that real discipline should come into government. Now sometimes the reason why people say we did not have proper fiscal discipline was because we paid 5,000 rupees to every person or every needy person identified in a certain way to deal with the COVID. Now that, to my mind, was an essential payment. It may appear to be a payment which has been somewhat of a waste, but to people who didn't have incomes, people who were struggling at that time, it was an essential payment. Same way, we did find some instances where certain vulnerable sections have to be provided with certain certain support. For example, I saw a fair amount of criticism for the 100,000 new jobs that are being created by the government. Those jobs are really for the worst affected people in our country. The people who have no jobs, the people who have no sources of income. So do we keep them forever in poverty, or do we say, let's take the bull by the horns, we'll deal with it. We give them a job, we teach the man to fish so that he will continue to fish, not just give a fish once in a way and see that he is happy. So some tough decisions like that have been taken. But while taking those decisions, we are creating the space elsewhere. We are creating the space with lower interest rates. If we can pull the dollar rate back, we will save a lot of money there as well. Just imagine if we have to pay next year $6,000 million, that is $6 billion, Nista. And if your exchange rate is appreciated by 5 rupees, we'll pay 30 billion rupees less. Parliament will have to allocate 30 billion rupees less to pay the debt. And if we have to pay another additional 5 billion out of that for people who are at the bottom end of our society, I think it's a useful balance. So fiscal discipline is important. We got to make sure that our overall numbers stack up right. We'll look at that, but at the same time we got to have a society which is contented as well in a country. I think that's important. So we'll take that balance. Sometimes these decisions need to be explained carefully, like what I attempted to do today, explaining the rationale behind the 100,000 new jobs that are being created. Those have a rationale, and that's a rationale that each government must be able to explain to the people. So while doing that, we got to find money from elsewhere. So if we let the fiscal numbers slip as a result of that, then I think we may be not on the right track. But if we can get it right, I think that's a good balance to have, and we would definitely be working on the fiscal numbers in time to come. If you look at the track record from 2006 to 2014, you would find that in 1 year, 2009, if I remember right, 2009, yes, that was the year that we finished the war. That year, the fiscal deficit went up to 9.9%. That is because there was a huge amount of money that had to be invested with regard to the reconstruction. But thereafter, we were able to pull that back gently, so that by 2014, the fiscal deficit came down to just 5.2%. So that was a number that we had planned to reduce gently, going down to about 4%. Now we have a bit difficult time, especially after COVID, we will have a higher number this year. In that we will pull back and claw back on the fiscal deficit, which will mean we'll have to make less borrowings, because fiscal deficit, which is all about fiscal space that we are creating, is about how much money we got to borrow, because the fiscal deficit is what we need to borrow. So the higher that percentage, the greater the amount that we have to borrow. So we will pull that back. 2020 is not a representative year, I agree, but having said that, we will get to 2021 to be a lot more responsible and responsive to these conditions, and we will work on that.
Nivad, I need a quick answer. I know this 100,000 will not immediately be absorbed, but you're already having a problem of a bloated public sector, and you're adding 100,000 in the next 6 months, and you're not addressing the elephant in the room.
The actual elephant in the room, Nista, is not only the public sector. If we have poverty, and if we have a society that is feeling that they are left out, that is the elephant in the room. Because you will find that you cannot survive as a society if you are neglecting large segments of our people. If you are quite comfortable about saying, look, we have got so many millions of people on Samruddhi, we should be ashamed of ourselves. That's not the way to go. So, to my mind, the elephant is that. We got to be conscious of the segments of our population which need support. We need to give them a hand. We need to take them out of that situation. So if you are not responsible for that, I think we wouldn't survive as a society for too long. So it's a balance again. Public sector, I know, is going to be a challenge, but if we can manage that, I think while managing that, that's a challenge for us. We are taking on that challenge. We'll have to manage that part. While managing that part, we also want to manage the social aspect of our country, which means that we got to make sure that we have a contented society, and that's good for all of us here, because all of you can enjoy all this stuff and have good, contented, happy lives, because we would have contented people right across the country. During the last 2 election campaigns, I went all over the country, from Jaffna right down to Mathura. And everywhere I heard this lament. We need jobs. We need support. We need to make sure that our children have livelihood. We got to hear that. We got to hear that. If we ignore that and we say that 100,000 jobs is something that we don't want to give to all these thousands of people who are in poverty, who are eking out a living, who don't know where the next meal is coming from, I think we are not done well with as a society. So we'll take that on as a challenge. We'll say, okay, we are going to support you. We'll support you, but at the same time, there's a challenge for us. How do we get that right? So please help us to do that. Pay your taxes in the future. That will help us too. Lots of times I get people sending me lovely notes saying, this is what we expect from the government, and this is what the government should do. I just sent one of those people a WhatsApp message back saying that, would you like me to tell what we expect from you? Went silent. Actually, he went silent, and I have not heard from him since. Hopefully, he's somewhere around and you will kindle that thought, because we got to also understand that there is no free lunch, my dear friends. We got to make sure that we give back what we have to give back to society. So if we do that, if I met with the Commissioner General of Inland Revenue, and he says, I have a book which says that 290 billion rupees is due. Now, I haven't said that out in the open, but today I am. But if you pay that, we won't have a fiscal deficit. That will be controlled. So, I'm not saying that the entire 290 billion is payable. Maybe some part of it is not. But some part of it is payable. So, if we make sure that we pay our taxes, we make sure that we also do not do certain things. I also had, Nista, pardon me for giving this as another example. One of those things that they expect from the government was that we have a good governance and free of corruption. So I also mentioned in that, who do you think corrupts the public servants? Is it another public servant? No, I haven't heard of that. I haven't seen one public servant going and corrupting another public servant. So who corrupts them? Maybe good for you to answer that.
Yeah, just since we are on jobs, there is a new dimension to this challenge is the returnees. We're about 50,000 returnees. Then the people who were made redundant because of COVID downturn. What are you doing about them? I mean, I understand the 100,000, but you have a growing number of jobless, and these are fairly well-to-paid or at the low-end people, particularly in multiple sectors.
That's another major challenge that we will face. We already have about 50,000 on the wings to come back. Actually, we are accelerating that process, mainly because we know how tough it is for them. Many of them have lost their jobs. They have no place to stay. Some people have no proper food to eat. So we got to get them back as fast as possible. And at the same time, we do recognize that some of them are coming back with COVID. If you look at the last few weeks, the numbers, there was hardly anyone who got COVID from within society, or actually no one. But all the COVID cases that Sri Lanka has had in the last several weeks have been those who have come from abroad. So that's another challenge, because we got to get them in, look after them, and then make sure that they don't infect anybody else. So that's a major challenge. But at the same time, Nista, what we are seeing is that we got to get them back as well. They are, after all, our people. So getting them back is important. Once they get back to looking after them is important. We also have another challenge, as you quite rightly say. What do they do after they come back? That's why we want to get the business going as fast as possible. So that's why we want to see that the macro fundamentals are conducive for you to invest and reinvest and reinvest. Because unless people invest, no new jobs will be created. So we got to create the jobs that are lost outside within Sri Lanka, and we need to do that fast. So that's why local businesses need to be nurtured, so that as many new businesses can start. Those that are having businesses, we got to ensure that the conditions are such that there won't be any additional retrenchments. So actually it's not an easy proposition. We have got it as a tough proposition, but why I'm saying this to you is just to give you indication that we know what the challenge is. You got to first know what the challenge is in order to deal with it. So there are many areas of government that are looking into it. There is a special task force that is headed by Mr. Basil Rajapaksa, which is looking into all these local industries to see how this import substitution could work, so that new economic activity is generated. They are doing a lot of work in different fields, and some really good work to ensure that these new businesses are supported and the existing businesses can function without too much difficulty. So these are being done in order to reduce this pain. But we know that this pain would be there unless we deal with it. So A, we are conscious that these things are happening. B, we know what the solution is. C, we have initiated work in order to work towards the solution. D, we got to make sure that it sustains itself. So the conditions have to be made in order to sustain itself, and that's what I can assure you we'll be doing. Sometimes there may be a gap. Sometimes we may have to deal with some of these challenges where it's in the unfinished stage. But at the same time, you can be sure that we would be addressing these until such time that it is actually done.
Prabhash, what would be the sectors or products that people will, going forward, that there is potential? Because we know apparel is only surviving largely on the PPEs, but going forward in the new normal, what would be the sectors that if someone wants to invest?
Actually, there's a misconception about PPE. It's a new item. I don't think we can say that apparel is only surviving on PPE. It's definitely complementary, and it's a new business that Sri Lanka has taken. I think that's a good thing. But their core business still remains strong. In terms of new sectors, I mean, I think I would like to talk about 3 different areas. I would say first is ICT. Lot of opportunities in Sri Lanka. It's completely not developed to the extent that we can. I think we can look at ICT to be a $5 billion business in Sri Lanka. Of course, we might not have the manpower to cater to a bigger business than that, but I think we need to look at niche opportunities within the ICT area for us to expand it. We are, what, $1 billion plus right now, but there's an incredible amount of growth. Second, I would think is the electronic sector. I think we've missed the bus on bringing people like Samsung's or the large manufacturers to Sri Lanka, but we should be looking now for our local companies to look at joint ventures with people who supply the Samsungs or people who supply Motorola, etc., right? So I think the electronic sector is another sector that could have a very strong growth down if we talk about 3 to 5 year horizon. And I think that's where Sri Lanka has not been strong historically in diversifying our export base. And that's, for me, I'm very passionate about, because I think we need to diversify our product base. We also need to diversify our markets. Third, and this goes in tandem with what the government's interest is, there's a strong focus today on agriculture. Most of what we're exporting today is not value added. So there's an immense potential in all kinds of value addition in the agri sector. So let it be in fruits or vegetables or any kind of food and beverage, there's so much that can be done. So you can bring in partnerships, you can bring in know-how from overseas, we can bring in FDI, local businesses can invest in this, and there's so much that can be done. So it's almost a blue ocean. So these are new businesses that Sri Lanka can do, and it would also help Sri Lanka develop our country as a stronger economy. I mean, I look at Sri Lanka and we see where we were before, where we are now. I mean, Sri Lanka will grow. That's what we are all aspiring for. For that growth to happen, we need certain game changers. And I'm passionate about the export sector being a game changer. I think we've shown the results this year, and today we brought in the required attention. I mean, it's the first time in 2.5 or 3 decades that I've seen an Export Development Council being headed by His Excellency the President being formed. I'm in exports for 26 years. I've never seen that before. It's the first time in the history. So we will have, even at that level, we'll have policy consistency, we will have direction, we will have support from government for businesses to thrive. So besides what I spoke about, I also think there are many different areas in the industrial sector that we can develop. We are looking at some trust industries that we would be focusing on in the next few months. Pharmaceutical is another area that the government is very keen about. I think Honorable Minister spoke about Basil Rajapaksa, who is the chairman of the Economic Revival Task Force and the Poverty Elevation Task Force. So he's driven policy to build a new pharma zone for Sri Lanka. So A, we will become less import dependent on our pharma. 2, we'll build a huge pharmaceutical business for Sri Lanka. We're exporting less than $10 million of pharma today. Can we export $1 billion? Absolutely yes. We need to bring in the right players to come and invest in Sri Lanka to do that. So I think the mandate that the government has had with strong and consistent policy going forward is going to set the right framework for businesses to invest, local businesses, as well as bringing in partners from overseas or FDI on top of that as well.
If I may just add to that, we would also probably be encouraging the construction sector, because in the short term, in order to deal with this current shock, if I may call it that, of people returning, of people looking for new employment opportunities, construction would probably be the answer. We would encourage construction. We have also seen a good situation where there has been apartment sales which have improved. We would like to see the road network construction work continuing. We have launched what is known as a 100,000 road program, and that's a serious one. So it's a program that is continuing, which will make sure that there is support at every part of the country. So that will take care of the short-term situation. Hopefully by the time these ventures that Prabhash was talking about will kick in, and when that is kicking in and then there are opportunities being created in those areas, we would by that time be in a position to allow the construction workers to migrate to these new areas, and hopefully by that time the hotel sector also would improve. So it's a kind of a holding period for us this next 1 year, and in that holding period we got to take care of all these new issues, and we intend doing it in that light.
Okay, thanks. Niva, just quick answers on what's the future of the IMF program?
Do you need one?
Well, you did.
Well, we at that time during the situation when there was a global crisis, then we went into it. Already now there is a global crisis, but at the same time we have already had an IMF program which has been going on. So we will review the situation fairly closely. As you know, the time that we went into IMF program in the year 2008, we went without any conditions being attached in order that we deliver on the program. Still there, out there in the IMF website, you can go and see. I have signed every one of those programs, letters of intent, and I can very confidently tell you that there have been not a single instance of any policy which has been, in my view, detrimental to our country or for the future of the country, which threatened any sovereignty or territorial integrity or anything like that. But at the same time, today we have been weakened, our spaces are less, so that's why we need to think out of the box and find some new answers as well. So we are searching for those answers. We are hoping to implement those. So IMF will be one more option. It's not the only option. It's not that we will run to the IMF and say, give us anything and we will agree to anything that you want us to do. We will use that as yet another option. We have new options, as I mentioned to you, getting new money to come in, doing other strategies that will encourage our economy to grow. After all, it's all about managing the shock of this situation. We have managed the shock quite well. I think the world recognizes that Sri Lanka has faced the shock. We have managed the shock. We are still able to live reasonably comfortably. Our normal things that we need for life are there. So we will look at IMF in that light. So we have not taken any decision as such, but at the same time we will look at all the options, including what I have just mentioned to you, and we will look at IMF in the same light and then see whether we need it, and if we need it, on what terms, on what conditions, and that's what we will be looking at.
Do you agree that the investor perception, particularly foreign investors, when you have a program with the IMF, it gives them confidence to invest more? I mean, do you agree with that statement?
I would agree partially. There is something in that, but when there is no IMF agreement also, people invested. In 2013 onwards, we didn't have IMF program, but we have whole hordes of investment flowing in. So there was no IMF program. People want an IMF program, or investors, foreign investors search for IMF program if they have less confidence in the economic management. That is the key. If you can instill confidence and people know that you know what you are doing and that you are delivering results, then IMF is not going to be a factor. IMF will be a factor only if you are not getting your act right. So hopefully we'll get our act right, and if so, the dependence on IMF will be less. I'm not ruling out IMF completely, because if IMF can give us some assistance, which is our right, without any conditions that will provide us with any difficulty, we can look at it. But at the same time, we will look at other options as well, like what I mentioned to you now. So if you look at those options and those options are more attractive, we'll take those attractive options.
And what's the status of the Millennium Challenge? Are we going ahead?
As of now, the committee that has looked at it widely has recommended that it should not be pursued. That's the line that the government has done. We have looked at the agreement so far, as has been agreed upon by the previous government, with an open mind, but we see many factors that do not make it attractive for us. So in that sense, we wouldn't go along with it, and I think that's the stand of the government.
Prabhash, talking about US, there is the trade war between China and US. You mean, can Sri Lanka make use of it? I mean, I know both countries are looking at as a strategic location. They are battling it out for that result. But from the trade front, is there an opportunity for Sri Lanka?
I think there is an immense opportunity, and I think maybe our businesses are not active enough to pursue that opportunity. Truthfully, as a government, we need to be careful. We have a very close relationship with China, so we can't go openly and talk about bringing in investment from China to Sri Lanka. But I think the opportunity is incredible. Simply because if you talk about what has happened in our exports over the last few months, right? The reason for our bounce back has been because of our COVID control. And that's shown resilience in the supply chains to the global supply chains. So customers today are buying products from Sri Lanka simply because they know that Sri Lanka can deliver. If you talk about next door, they don't know how many days the factories will work and how many days the factories will not work. So our COVID control has basically led to our economic revival in Sri Lanka. So using that as a platform, and on top of that, using our logistics as a platform, and what we are 18 days away from shipping into Europe, 24 days away in shipping into the west coast of the US, 28 days to the east coast of the US, we have so much to offer. Our businesses must use this as leverage to go and talk to the world and talk to them and bring those opportunities to Sri Lanka. I mean, I think entrepreneurship is that.
For which you need to sort of start opening the airports as well to move about. Niva, just on the geopolitics, how will this government manage, because it's getting very exciting these days?
We have announced our policy as being Asia-centric, if you noticed. We have particularly mentioned that we would give more focus to our relationships within Asia. That doesn't mean that we would like to neglect any other segment of the world. We would work with everyone, but we would realize, and we have realized, that we got to work closely with our neighbors as well. So we'll continue with that policy, and at the same time we do understand that certain geopolitical matters need to be recognized. We do understand that there is some tension between China and India. So we got to tread a path which does not antagonize any one of these superpowers. Actually, we do have a very good relationship with both countries. We have made sure that we do not in any way do anything that will jeopardize our relationship with any one of them. So we have been able to, I think, work on those lines, and we will at the same time we got to understand that these geopolitical tensions do exist. So in that sense we got to steer a path which does not antagonize any of our friends. We got to make sure that the superpowers are also given the right respect in their own way. So I think so far we have been able to maintain that position quite effectively, and we'll continue to do that. At the same time, you would notice that there were certain instances of human rights and so on that had been thrust upon us by various groups. That's another delicate matter that we need to manage in a delicate way, and at the same time make our position very clear. So that would be the challenge for the government, to have our position very clearly set out. At the same time, we do not compromise our national standard as well as our national integrity. So that would be the stance that we would take in going forward, and I think although it sounds rather challenging, we would be able to manage that if we get our positioning right.
Diplomatic answer, sure. But the perception is that Rajapaksas are pro-China or more friendly towards China, and some people are even expecting China to bail us out. I mean, is that correct to have that assessment?
Well, you can love your children as well as your wife, no? So what it means is we got to have a relationship that is open, and at the same time we do not unnecessarily favor any particular country over the others, but we got to understand the realities. China has got $1.3 trillion investment in the US. Nobody is grumbling. Nobody's saying why is China investing so much. Well, that's China is having the money. China is investing. At different times in history, different countries were the countries that had the money. At one time it was Japan. Japan invested all over the world. Before that it was UK. US also used to be the front runner in investing. Today it is China's turn. So China is investing all over the world. China is investing in the UK some $40 odd billion. China is investing in Pakistan $40 odd billion. China has invested in Sri Lanka only about $10 billion. Why are people concerned about that only? If you take the Sri Lankan bonds, the US has invested as much as China has invested in visible projects. China has invested in projects that people can feel and touch and see. US has invested, US investors have invested in Sri Lankan paper almost as much. But that nobody can see because it is invisible in a sense, because it is in sovereign bonds and nobody can go and feel and touch sovereign bonds. But it is still an investment that is already with us. So we are open to investment.
Yeah, the Chinese is all state investments, whereas the US investments are all individual funds investing.
So it doesn't matter. Money is fungible. Nobody asks who is the state, who is private. This hotel is owned by the state, but you are enjoying yourselves. This hotel is owned by the state. So, but nobody says Hilton is owned by the government. You will have dancers, you will have parties, you will have conferences, you will have seminars. So, ownership is the part that does not warrant itself as being one of the key conditions. But overall, in China, we have one model. In the US, you have another model. Sometimes those who go and invest in other countries, in China also, there are lots of local people who have got huge investments in those countries. But that's a different model. But when the money comes, the government sanctions it. Or if US doesn't want a certain investment to be channeled to a certain country, US can stop that. So if they don't stop it, that means they tacitly allow it to happen. Same way China. China can stop it directly. US can stop it indirectly. So I think we got to understand the origin of the investment is from different countries, and Sri Lanka has had a very good relationship with all those countries, and we continue to have that relationship. So I think that's the way to go, and we'll continue to go that way.
I have two questions to Nivad and Prabhash before we wrap up. During the election, the government was insistent on a 2/3 majority, largely on governance issues and political issues. Will this government use that 2/3 majority to push or resolve or reforms which will improve efficiency in the economy? Do you see that they will use that for the economic advantage as well?
Of course, already we see businesses reacting to a 2/3 majority. The fact that the stock exchange has been having a ₹1 billion turnover daily is to some extent dependent on the economics and the political stability as well. They know that President and Prime Minister are seeing eye to eye. They know that this is a government that will be there without any difficulty for the rest of the term. They know that it has the clout to make improvements. All those are factors that businesses will also understand and react to. Although they may not come out openly and send you a letter to the editor, they have it within their minds that here is a government which is strong, which is going to be there, with which we'll have to work, and which will deliver. So that's a very sound proposition. And the fact that the government got this majority itself is a major feat. I think at the time that President J.R. Jayawardena brought in the Constitution in 1977 or 1708, he mentioned specifically that no one will be able to get a 2/3 majority. But we got. We got because the people wanted it to be given. People were tired of these wishy-washy governments. People were tired of people coming and giving excuses. People were tired of economic development being stagnant. So people wanted a fresh change. People wanted this to happen. That's why they gave that. So we'll have to deliver. If we don't make improvements, if we don't improve the business climate, if we don't give you the space to develop your own businesses, you will probably react in a different way. And they say, we gave you the power, we gave you the responsibility, we gave you the authority, but you didn't do it. So that's another challenge that we'll have, because we'll have to deliver on what you have given. And we intend doing that.
Prabhas, you are the only investor in the panel. Do you see that confidence, and what have you been investing in the market, or you're just taking a back seat?
I don't know if that's a fair question, but I always invest for the long term. Historically, I opened my first account in the stock market 2 weeks after the war ended in Sri Lanka. So I believe in the long term. I think Sri Lanka has a long way to grow, and I think we need to see that cycle through. Of course, you'll have pluses and minuses, and you need to weather the storm. Even when we invested in Sampath Bank last year, we just invested a month after the bombing because we felt that was a conducive environment for people to invest. So we, generally the way we invest, we don't look at the short term. We're not here to make a fast buck. I guess it's because of our industrial background. We invest in businesses where we look for return over 5 years or 7 years. Could be, if we are lucky, it could be 3 years, and those are large investments that we have to wait a long time. So to some extent, I would say it's patient capital. I think it's an interesting time to invest in the Sri Lankan stock market. I mean, if I took all my money in the stock market and invested in the US stock market, the answer would be a miraculous answer, because when you see how the US stock market has performed. I think Sri Lankan stock market has a long way to go, and I think people should look at investing, and also in a low interest rate regime, this is the only investment that you have, unless you go and invest in businesses on top of that.
Okay, thank you very much. There's a question. Okay, keep it short, because I was planning to wrap it up. Okay, Niman, don't answer. Just there's one more question, and then we'll take it.
I'll take your question first. As far as the vaccination is concerned, I've been always of the view that the world will undergo a V-shaped recovery the moment you have a vaccination. V for vaccine, and V will be the way that it will go, because I think it sounds so simple, but you'll see extraordinary turnaround in the world economy. So, and I also believe that the vaccination cannot be that far away. And when that happens, we will probably forget about all this stuff very quickly, and people will get back to normal, and the new normal will be a different normal from now as well as what was there pre-COVID. The second part, you had 3 questions. I will explain to you in all 3. I'll take the last one first. We do not have any intention of listing the SOEs. We want to improve those. If someone is wanting to sell SOEs, then they wouldn't have voted the Rajapaksa government in. So there was a clear message from people. They wanted state assets to be retained by the state, but state assets to be improved. So my function as a state minister, one of the functions, and I have it in my to-do list given by the president, is to ensure that the public sector institutions will be improved. So I will be devoting a lot of time for that, mainly to see that there would be improvements in all these public sector institutions so that they will deliver better results. Our doing business indicators will improve, and that we will be able to work on those lines. With regard to the state funds investing, we all know that people like state funds to invest, but at the same time, state funds are also funds. They will have to take their own calls on that. If they wish to invest, they can. If they don't want to invest, they can also not invest. So it's entirely a decision that will be entrusted to the management of the funds, and then they can take their own calls as to whether they would want to invest or not invest. That's entirely their call, because I think they have several instruments that they are investing now, and if those instruments are yielding the right results and then the owners of those funds are comfortable, I think we should allow them to continue doing what they are doing. And if they wish to do what they are doing and then they want to continue with that, as a government, we don't want to interfere in those funds. I've dealt with all three, no? Yes. Thanks.
You are ruling out even a sort of partial listing of certain state particularly in the banking sector, where they are anyway efficient, they are fairly well run, but sort of a partial or a token listing is not, you are ruling it out.
Yeah, I've seen lots of people asking the question, but their own family-owned businesses are not listing. They keep their funds, they keep their family businesses to themselves very nicely, but they come and tell the state, list your bank, list your this or list your that. So I think each institution or each owner has their right to either invest, list or not list, and it's up to the stock exchange to make it attractive. So if the family-owned businesses want to come and list, there must be an instrument to do that. And if the state wishes to invest, this government is not inclined to do so. That's the only thing. As a policy, our government is not interested in listing, but the government will be interested in doing private-public partnerships with people who want to have a partnership with government to do some business activity. But that's something that we look at fairly seriously and see how best we can move forward. But certainly ownership of those assets, the current government's thinking is that they would retain the ownership within the state so that the people of this country can enjoy these assets in a long-term basis.
Okay, thank you very much, Nivad, for a lot of time. I think we went beyond 1 hour. I'm sure we can go on, but I think enough, yes. Thank you very much, Nivad, as well as Prabhash, for being very frank, I would say. And I'll hand it over to Sharon to finish the.
Thanks a lot. Can we give a round of applause to our panelists and our moderator, ladies and gentlemen? And we'd like to invite the Managing Director of Sampath Bank PLC, Mr. Nanda Fernando, to present a memento to the State Minister of Finance, the Honorable Ajit Nivad Cabral, for gracing this occasion here at the 5th Investor Symposium organized by Sa Securities. Thank you, Mr. Fernando. Can I now invite the Chairman of Sa Securities, Mr. Sunil G. Vijay Singha, to present a memento to our panelists. Round of applause, ladies and gentlemen, to also Mr. Prabhash Subasingha. Can I now invite the Chairman of IWS Holdings, Mr. I.W. Senanayaka, to present a memento to our moderator, Mr. Nista Kasim. Thank you very much, gentlemen. You may resume to your seat. Thank you. Ladies and gentlemen, it's been a tough year for 2020, and we have a set of investors who have been very instrumental in resurrecting the Sri Lanka stock market from the depths of COVID-19. And we're going to take a moment now to recognize all these individuals and our very valued investors. Despite on Twitter being so active, we thank you for your time in taking that effort in investing. Can I invite to join us as presenter the chairman of IWS Holdings, Mr. I.W. Senanaika, sir. Would you please join us on stage to recognize our investors? Mr. R.S. Captain. So if you're with us, I believe he'll join us shortly. Mr. Nimal Pereira. Dr. T. Senthivel. Mr. Sashikar Ranasinghe of Sri Lanka Insurance Corporation. Dr. Naveen Gunawardana of Linear Wealth Management. Mr. Supun Kumar Sena, Employees Provident Fund. Mr. Udaya Vikramanayaka, Employees Trust Fund. Mr. Amila Gotheju, Bank of Ceylon. Thank you, Mr. Senanaika. Thank you. Can I now invite Mr. Sunil G. J. Singh, sir? Would you please join us on stage? Chairman of Sa Securities, ladies and gentlemen. We'll be recognizing the rest of the institutions. From NDB Wealth Management, Mr. Prabodha Samarasekara. Carson's Fund Management, Mr. Asanka Jayasekara. Namal Asset Management, Mr. Rusiru Abe Singha. Mrs. Lalangi Gunawardana, Merchant Bank of Sri Lanka. National Savings Bank, Mrs. Devika Silva. C Bank Asset Management, Mr. Ian Ferdinands. People's Bank, Mr. Lakmal Jayaratna. From JB Vantage, Mr. Suminder. And from Asset Line Income Growth Fund, Mr. Vishan Pereira. Thank you, Mr. Jayasinha, thank you very much. Well, ladies and gentlemen, that concludes the 5th Investor Symposium organized by SC Securities. For further details on our events, we'd like you to log on to our Facebook page, which is SC Securities Private Limited. We'd like to say a very big thank you to our panelists, the State Minister of Finance, Capital Market and State Enterprise Reforms, the Honorable Ajit Niwad Kabra, together with Mr. Prabhash Subasinghe, renowned entrepreneur and chairman of the Sri Lanka Export Development Board, and our moderator, Mr. Nista Kasim, for joining us here today. And to all our valued investors and partners, thank you very much for joining us here this evening. We'd like to now invite you for fellowship and a little goss that's happening in the industry. Have yourself a wonderful evening.